Hello and welcome to Pro Trader Strategies for Wednesday, July 1st. We got June out of the way and hopefully this isn't a train wreck coming into July as it just seems like we are just over halfway through the year and it feels like 2020 has lasted for 2 years already with everything and the whipsaws in the markets and the news and everything else, and trying to figure out this whole pandemic thing has really been a wild ride, to say the least. So my name is Eric Wilkinson, and yes, you very well may recognize me from mainstream media where I've talked about stuff just like this, the geopolitical environments, the economic data, and how that impacts the overall markets with my market analysis. Well, we're going to get into that right now with the economic data. Across the pond, we did get manufacturing final PMIs, but remember the number we really look for is that flash estimate. But having said that, the Spanish manufacturing PMI coming in at 49. Remember, anything above 50 is expansion, anything below 50 is contraction. So still seeing a bit of contraction across the pond here with a 49, albeit just below the water level. Expected to be 45, so better than expected there. We got the Italian manufacturing PMI in line with expectations at 47.5. We've got the French manufacturing. Now remember, France and Germany are the manufacturing sectors of the European region. French manufacturing 52.3 in line with expectations. German manufacturing coming in at 45.2, expected to be 44.6. Those are all PMI numbers. The greater European region outside of those major ones came in at 47.4, expected to be 46.9. And for Great Britain, it came in at 50.1, in line with expectations there. Then, let's talk about what that did to the overall markets. Well, you can see, because it was, below 50 for the greater part, and this is manufacturing, we saw the markets really start to sell off. Markets weren't really loving that, with nothing better than expected there. Then we, here in the United States, got our ADP non-farm payroll number, which really accelerated this a little bit to the downside at around 5 o'clock. We got a bit of a push to the downside. Well, that number came in 500,000 below what was expected. So the non-farm payroll changed. This is hires in a sense. So you want this number to increase. Well, it came in at 2,369,000. It was expected to be 2,850,000. So almost 500,000 less than what was expected. Well, the revision on the last one, if you guys remember that one was a negative 2.6 million. Well, they revised that to a positive 3 million. So 5 million increase there in the revisions. That caused us to start really moving to the upside, as you can see here on the overall markets. And then at, 7 o'clock, we got the, right here, 7 o'clock, we got another lift as the market was consolidating ahead of this number, which was the ISM, Institute for Supply Management Manufacturing PMI, which is our big number here in the United States. Anything above 50, expansion, anything below 50, contraction. Well, markets started consolidating. People started getting a little worried. Did this number get leaked as we started seeing the sell-off? I think it was just more so that people were covering some of their longs ahead of this economic data point. Well, it came in at 52.6. All right, so that above 50 is expansion. I think that really surprised people. It gave us another leg up on the day. It was expected to be 49.6. So expected to be below 50 or in contraction area. We got above 50, which is expansion. I believe this has a lot to do with, think about this, you guys. This, right now, the situation we're in with the unemployment rate and everything else is worse than we saw back in 2008 and took us a long time to get out of it. Well, it's because of this velocity of money. Yes, a lot of people are complaining. Well, people that are unemployed are making more money than they did when they were employed, and the stimulus checks, all of those things have created velocity of money. This administration hasn't told you how to spend it, like go out and buy a car, cash for clunkers, and kind of stifled it where maybe we're talking about increasing taxation and stuff to pay off all this stuff. No, it was Get out there and spend that money. 80% of that money was spent in local communities, really allowing these local communities to survive. Yes, there are people going out of business. I'm not going to lie. And now with another lockdown, some of these companies, that were doing okay during the coronavirus, there's a local restaurant that used to have a line of cars. They decided they couldn't sustain anymore and decided to shut down for the foreseeable future. So we're going to start seeing that happen with the second round of lockdowns, where the bars and restaurants and things like that are starting to close back down because they made it through. They were treading water and made it through this first round, but this second wave is probably going to be the nail in the coffin for a lot of these people, unfortunately. So we're going to have to see how this works out going forward. It almost is like giving people the idea there's probably another stimulus check coming down the road for some of these folks. And construction spending did throw a bit of a wet blanket on this market. I think more consolidation, but construction spending coming in at negative 2.1%, expected to be a positive 1%. They did revise last month's number down slightly as well. But that, to me, isn't really that far out of the realm of expectations, as we're not probably seeing companies want to expand or add construction costs to in this economy. They're going to just try and get up and running, right? Another thing we did see just recently was the crude oil inventories coming out at drawdown of 7.2 million barrels, expected to be a drawdown of 0.9 million barrels, so much bigger than expected. That's going to give a lift to crude oil. Maybe those mid to lower 30s are out of the realm if we start seeing this kind of demand for crude oil and this kind of inventory getting moved. We are still at record inventories in crude oil, but this should give crude oil a little bit of lift to the upside. So here we have the E-mini S&Ps up on the day. Yeah, I switched the charts around just a little bit. We'll talk about the equities as the economic data is pushing them higher today. E-mini S&P still up 10 on the day, and NASDAQ up 83, really being supported by these tech stocks, the stay-at-home stocks. Tesla doing very well today. As a matter of fact, Tesla we'll talk about here in a little bit, but their market cap is now greater than Toyota, if you can believe that. And our Dow Jones Industrial Average is in negative territory after being up almost 100 points earlier today. It's right in the middle of the road at this point, but I do think that the Dow Jones will start getting a bit of a lift towards the end of the day. And it's no surprise that we're seeing the VIX come off with the strength in the equities for the most part there. Crude oil up 35 cents, not quite into the 40 handle. We were there just ahead of that economic data point and thereafter, but now we're starting to see a little bit more consolidation happening. We probably could see this kind of trend. It's going to be a major resistance at that $40 a barrel area. I think that's just a big psychological level that people are going to have to try and get through. Now, gold futures coming off by 25 points. I was kind of expecting us to get a bit of more of a push to the upside with the expectation that there might be more stimulus down the road. We talked about that a little bit yesterday. But today, with the strength in the equities and the strength in those economic data points, gold is kind of faltering based on that, as people are going to be moving money out of the precious metals or the safe haven of gold and starting to put it into more riskier assets like we're seeing in the equities. And they are going for the tech. So that's the higher risk area, right? We're seeing the Dow Jones at this point slightly in negative territory. So they're bypassing the blue chips and going into the more risky stock, which, are they more risky at this point in time? I don't know, but because they're the ones that are going to be doing well in this type of environment. As a matter of fact, I'm even seeing a lot of commercials out there based on the fact that they know people are trying to build out their home office and are trying to sell those types of, whether it was office furniture was the thing that I really saw. All right, bonds did make a move to the downside as equities were moving higher. But again, the market signaling, hey, we are going to be here for quite some time. And something to note, I've been talking about this for quite some time, right? And it happened today as we are seeing the market make a shift to the upside. We've seen the volume, or sorry, not the volume, this is the time node switch up into this area, up into that upper band where I've been talking about. I thought it was going to move closer to 180, but right now at 178.11 and right on the mark of where we are trading right now. So that's where the time's been spent. Not a whole lot of changing in volume, but the time spent there, the complacency where price is being accepted at these levels is what I've been talking about for a month or so, that this was the area that we were going to start seeing build out. Now, yes, I did think that we were going to see a little bit more volume there, but at the end of the day, we are seeing the time spent there, which is creating that volume node or that magnet in and around that area where I said, you know, this is kind of out of the question. We are not in that type of economy anymore. The economy is in a low rate environment for the foreseeable future. And then Tesla, here we go. This is what I wanted to talk about. Tesla moving higher today by about $50 almost. And that has created them to be the biggest car manufacturing in terms of their valuation. They are a bigger company now than Toyota, who probably produces, I don't know, 10 times as many vehicles. So Tesla just knocking it out of the park today with that move to the upside. I wanted to talk about that because yesterday we talked about them a little bit today. They blew the top off of that and now are the biggest car manufacturer, quote unquote, in terms of valuation. That's all I've got. Like I said, you know, with these markets moving to the upside, I am delta positive. I am looking for opportunities to add some negative deltas to my portfolio, but I haven't seen anything that's really jumping out at me until I start seeing some kinks in the armor. I'm going to stick with this. The other thing I wanted to talk about is tomorrow we're doing a webinar. So synthetic longs, if you are dealing with like limited margin, but you want to create a better or more diverse portfolio, this is the way, in my eyes, to do it. And I'm going to talk about how you can supplement just going out and buying stock by using this option strategy, and you will get dollar for dollar on the moves that you are directionally correct. So we'll talk about that. We'll go into details, how to set that up, what the right duration is, the right environment, and strike locations, all of those things, how to build this strategy out so it mimics what that underlying is doing dollar for dollar. So check that out at protraderstrategies.com. Other than that, I got one more thing we got to talk about, right? And that comes at the end of every webinar is my disclaimer. So please take a moment to go over this disclaimer, as we are an educational company and are trying to teach you guys how to trade. I'm not trying to give you any trade recommendations. All right, so without further ado, if you can't take that, take it easy.